Hello, and you're welcome to Global Business Insights, where we take a deeper look at the headlines from a business perspective. Japanese exports were up 10.3% year on year in July for an eighth straight month, still less than forecasted. Overall shipment volumes, however, fell 5.2% last month from the year ago period, the sixth consecutive month of declines. Softness in the major market, China and overseas demand, hurting export outlook in Japan. US retail giant Low shares were down as it saw lower than expected do-it-yourself, that's DIY sales, and a pressured macroeconomic environment. It reported quarterly sales down 5.6% from the previous year to $23.59 billion. This was as high interest rates and inflation both weighed on revenue. According to CEO Marvin Ellison, he said on the earnings call that DIY customers are pausing on home improvement projects. US stocks struggled after a rally that drove the market closer to all-time highs, also ending their longest win streak of 2024. Also, as investors awaited insights from Federal Reserve officials as they meet at the annual Jackson Hole Symposium. As many as 120 participants are gathering starting on Thursday at the annual Jackson Hole, Wyoming Economic Symposium with the theme reassessing the effectiveness and transmission of monetary policy. Later today, we get U.S. Federal Reserve minutes. Also, the Bureau for Labor Statistics preliminary annual payrolls revision is expected to show more weakness. That is come out far less robust than initially estimated. And UBS analysts are saying we can still expect more volatility in markets going forward. Yesterday, the European Union said it will introduce an additional 9% tariff on Teslas imported from China as it notified automakers of its draft decision to move forward with tariffs on electric vehicles shipped from the country. This was much less than the heavier rates imposed on other Chinese car makers exporting to Europe. And in the US, as the Democratic National Convention progresses, analysts are digesting an announcement earlier in the week that Kamala Harris, leading in the polls, will stick to a proposal put forward by President Joe Biden to bring the corporate tax rate up from 21% to 28%. The Alaska Air and Hawaiian Airlines merger, we understand, will not be challenged on antitrust grounds, potentially emerging as the first major U.S. airline merger since 2016. Alaska shares were up about 12% yesterday. All this as grocery chain Kroger is trying to stop the FTC, Federal Trade Commission, from challenging its own merger with peer Albertsons. Still in the U.S., a federal judge in Texas yesterday barred a U.S. Federal Trade Commission ruling from executing a ban of agreements commonly signed by workers not to join their employers' rivals or launch competing businesses. U.S. District Judge Ada Brown in Dallas said the FTC, which enforces federal antitrust laws, does not have the authority to ban practices seen as unfair methods of competition. Qatar Airways will take a 25% stake in South Africa-based regional carrier Airlink as both airlines seek to boost services and passenger numbers across Africa. The investment, that is the highest foreign ownership stake possible, would boost Qatar Airways' access to passengers in more cities in Africa, also allowing Airlink to expand in the continent. Ghanaian President Nana Akufo-Addo has broken ground on construction of a 300,000 barrels per day oil refinery that the government hopes will turn Ghana into the region's petroleum hub. Some competition for Nigeria there. Ghana, the world's second biggest cocoa producer, only became an oil producer in 2010. And in Nigeria, the central bank in a press release reported higher remittance inflows reaching $553 million in July 2024, a 130% increase from the corresponding period in 2023. It was also the highest monthly total inflows on record and reflects ongoing efforts by the CBN to enhance liquidity in Nigeria's foreign exchange market. Senior business analyst Lekon Shotek comments on the Apex Bank's initiatives to double remittance receipts within a year. Welcome back. Market watchers will be paying very close attention to deliberations at the Jackson Hole, Wyoming Symposium of Central Bank. That's the leadership conference. This was as former President Trump insists executive leadership should have a say on monetary policy, but clarifying this is not to impose its will. The Fed can take the counsel or leave it, he says. Also, as Kamala Harris promises to introduce legislation to arrest price gouging and more financial support injections, which some have said may complicate the fight against inflation, seen as driven by demand pressures in the US. Investors are looking for signals from Powell on cutting benchmark interest rates from its current quarter-century high. The speech of Powell is also a chance to gauge the latest thoughts about recent economic data. We have seen data like unemployment rising and manufacturing slowing, raising fears of a slowdown, and other reports showing inflation slowing down and retail spending accelerating, signaling resilience. As the quarterly earnings wrap up, we have seen S&P 500 earnings per share growth up at 10.9%. Thus far, 79% of companies that reported have surpassed analyst profit estimate, while only 60% have beaten revenues targets. The pressure on margins is palpable. Outlook is less optimistic, but we are yet to see obvious evidence of a hard landing. Yesterday, Federal Reserve Board of Governors member Michelle Bowman hit newswires, tempering expectations of a near-term rate cut. Fed Governor Bowman said recent progress on inflation, price growth levels still remain well elevated compared to the central bank's target ranges, adding that recent moves in the unemployment rate may be exaggerating a general cooling in employment activity. And on the politics, Powell is expected to reassert at Jackson Hole the criticality of independence and ignore suspicions that there are political pressures to cut rates just before the elections, earlier than the economic data suggests. Powell's views will stay above the fray of the political noise. Still, the massive record high spend by both parties during the campaign may add more demand pressures, making waiting for the data to be even more important. While the ECB already cut its benchmark rate more than 2 months ago, and Britain's central bank moved on the 1st of August only by a narrow 5-4 vote, the Fed has yet to cut rates. Also, unlike the supply-driven inflation in Europe and the UK, which was easier to tackle, a demand-driven inflation may need higher rates for a longer period. The Central Bank of Nigeria reported remittance inflows reaching $553 million in July, up 130%, and the highest monthly total inflows on record, reflecting success of ongoing efforts by the central bank to enhance liquidity in Nigeria's foreign exchange market. Measures like granting licenses to new international money transfer operators, implementing a willing buyer, willing seller model, and enabling timely access to naira liquidity for international money transfer operators seem to be having the desired impact. Senior business analyst Lekon Shotek comments on why more funds need to be attracted for industrial growth instead of mainly to money markets.
The naira is weaker, definitely. And so, diaspora Nigerians who want to send in money to their relatives and friends or for projects in Nigeria could just send something lower than they used to spend. For example, you used to send 100,000 naira to your mother in Nigeria, and then you needed just 100 pounds to do that. Now that the naira is even weaker, maybe you can just send 50 pounds and that will take care of that budget for you. So it's easier. So a lot of diaspora Nigerians are encouraged to send remittances back to Nigeria. And then, of course, for portfolio investments is a lot more profitable these days. Treasury bonds, treasury bills pay higher returns, and that is encouraging. And so a lot of capital that is free easily flows into the Nigerian money and capital markets. And so there is market for that. There's an opportunity to investments with high yield, which is the new regime under Governor Cardoso of Central Bank. And then thirdly is that we saw the efforts of the Cardoso regime of the Central Bank to ensure that, remittances of companies in Nigeria who their remittances are made easily. For example, airlines. We saw how much the CBN tried to look for money to ensure that their remittances are made. And that is encouraging to any investor. But then, is this the best for Nigeria? I'm not exactly sure, because funds that could have gone into brick and mortar industries are easily going into portfolio investments, because they do not have to establish routes and obey so many of our difficult rules in the business space. You will observe that the macroeconomic policies of Nigeria as at present are not too clement for profitable investment in the brick and mortar industries.
Still in Nigeria, Nigerian National Petroleum Company Limited, NNPCL, yesterday released its 2023 audited accounts, declaring a 28% increase in net profit at 3.297 trillion naira. NNPC does not communicate forecasts or estimates. Return on assets, however, fell from 6.87% in 2022 to 4.4% in 2023. Return on equity was 12%, unimpressive in a country where the zero risk central bank rate is 26.75%. Saudi Aramco's return on equity for 2024 first quarter was 28.7%, more than double NNPCL. A payout of 80% by NNPC is also concerning. Is NNPCL investing in better operations, pipeline infrastructure and technologies, or is it being aggressively milked by a broke government to the detriment of its sustainability? In Asia Pacific markets were mostly lower on release of Japanese trade data and after US benchmark indexes snapped an 8-day winning streak. Chinese technology stocks led declines. We also saw shares in JD.com down as much as 12% in early trading in Hong Kong after Walmart and two of its subsidiaries said they had sold all their shares in the Chinese business. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Again, thank you so very much for watching. Bye-bye.